Hello, everybody. So today I want to talk about the real brokerage. This full analysis is brought to you by one of my channel highest tier supporters on Patreon, and it is a stock request from them, and I thank them for sponsoring this video. So let's talk about Reax, the real brokerage. So they are a software broker. This is the best way I can describe it. They're a full stack technology company, mostly driven by software, and they help agents pretty much evolve on their own by using Reax as opposed to using a local mom and pop broker, a local office, your standard, your Remax, Century 21, etc. These old mom and pop brokers, which typically include an office, and real estate agents have to pay a high fee to them. It entirely takes that proposition, digitalizes that, and takes it into an app. And so this is all about using a tech stack. This is all about using the software to really disrupt the analog cost structure, and that would be things like office space, things like billboards, local marketing, all of the signs in the streets, etc. It's a very old and outdated industry, the real estate industry, and it's bringing tech to that and disrupting that. But contrary to, say, a stock that I've covered many times in the past, Open Door, the real brokerage walks with the agent, puts the agent at the center of a value proposition. And it creates very interesting growth perspectives, and we'll get into that, into how they recruit agents and how they have some sort of a multi-level marketing way to recruit new agents, as opposed to just spending money to try to acquire new agents. Agents join the platform organically, and this business has organic growth because pretty much agents, they don't want to pay 30% of their commission anymore. They want to pay only 15% of their commission. And of course, that's the main value prop of this app, of the real app, is that agents are charged 15% as opposed to 30% at a traditional broker. And another aspect of this company, of course, is like any modern company, they want to be vertically integrated, and that means, what does vertical integration means for a real estate broker? That means including mortgage and title in the business. And of course, the title business and the mortgage business are much more profitable than the real estate business. So of course, if you work with an agent, they hope that you will get the mortgage via their platform, and they hope that you will get the title via their own title company. And these ancillary services are much higher gross margin than the real estate business, which has a very low gross margin, as we'll see in a second. That is one of the downside of this business. But this business is about disruption of mom and pop brokers. That's a very simple story. Disrupting your local broker, which, by the way, brokers are very often criticized by their real estate agents. I've worked with quite a few agents throughout my real estate years, and I can tell you that I've heard many agents just say, "Oh, brokers make all of the money. It's really the brokers that make the money." Well, there you go. This is an opportunity to be the broker, but the digital broker, the better broker, the broker that is loved by agents, because this broker doesn't take nearly the same amount of cost as a traditional mom and pop broker takes. And so anyways, before I go more into the business model, let me show you about the financials. And the financials really speak for themselves. So you can see the revenue growth of this business has been outstanding. There's nothing short of outstanding. It was growing well into the 40%. Predicted growth based on analysts, and there's only 4 analysts following this stock, but based on analyst number for December 2025 full year, analysts are saying 1.72. So I extrapolate that, and that would be a forward revenue growth of 36%. But keep in mind, A, they have a tendency to beat those revenue growth targets, and B, there's only 4 analysts. So that number could be higher, could also be lower, but if real estate picks up, this number, in my view, will definitely be higher. And I'll conclude this video telling you about real estate picking up, because they publish very interesting data about the number of listings today compared to 2021. And this is very impressive for this broker to be able to grow so fast in such a crisis for real estate. Real estate sector has been entirely destroyed by interest rates. It's an enormous crisis out there in real estate, and this company is growing. Why is it growing? Because it gives real estate agents a much higher commission, twice as big as your regular traditional mom and pop broker. They've achieved adjusted EBITDA profitability. It's my proxy for free cash flow. It's what I care about. They don't have GAAP EPS just yet. They're not EPS profitable. Typically, this type of company tends to get noticed once they start to show GAAP profitability. So this is an opportunity to get in early. No financial advice, of course. I'm just covering this stock, but I'm interested. I find it very interesting. It would be a small position for me, but I find it very interesting. Also, if you look over the long run, the gross margin is fine, but the gross margin really sucks for this type of business. There's no other way to say it. And we'll get into how revenue structure works. Typically these high expensive items, and of course the item that I'm talking about here is the commission, right? It's the agent's commission. It's not the actual sales price of the house. The Open Door, if you follow Open Door, is in their revenue figures, they have actual sales price of the house. And so that gives you gross margins that are even worse than that, like in the 2 to 3% range. Right here, it's a 9% gross margin on the commission. So that's the take rate. That's your 15% take rate minus the marketing. I'll walk you through the unit economics. But this business is achieving operating leverage. Why? Operating expenses as a share of revenue are going down, and that's because the revenue is now growing faster than the operating expenses. And what that means is that the adjusted EBITDA and eventually the earnings should grow faster than the revenue itself. The business has no debt. The business has a little bit of cash on its balance sheet. It's actually not that little bit, right? We're at $32 million of cash for a business that's only $780 million in enterprise value. That's not bad at all. And I'll conclude this financial segment here by showing you the dilution. And the dilution has actually been very low for this type of business. I'm typically comfortable with much higher dilution. Here you can see they've actually managed to reduce their outstanding shares from September to December quarter. So from Q3 to Q4, they actually reduced shares outstanding. And you can see the growth in shares has been extremely reasonable for this company, which is surprising because they have RSUs as part of their broker compensation, as part of their agent compensation. They have some stock options as part of that, and even with that, the dilution has been more than reasonable. I know many of my viewers are very antsy whenever they see dilution. This is not a stock to be worried about when it comes to dilution. I think they've been doing a good job. So the numbers look good. And to highlight how cheap is this stock, enterprise value over forward revenue is under a 0.5. That's very few stocks like that. Now, of course, a stock with gross margin of only 9% should trade at a lower multiple, but this is still a pretty low multiple. The business is trading at an enterprise value to forward gross profit of 5, which is also dirt cheap, and an enterprise value over adjusted EBITDA of 19.7. This is normal cheap. This is not dirt cheap, but because the operating leverage is going to kick in, if in a year the stock price doesn't shoot up, this will look dirt cheap by then. Look at the productivity, and I love how they highlight their productivity in their investor presentation. I'll get to that in a second. Productivity is 4.79 million. So you're talking about, this productivity is actually in line with, say, Airbnb's productivity. Applying digital rails, software rails to real estate creates extremely productive businesses. They have less than 300 employees, more than $1 billion in revenue. This is definitely a modern company competing against overstaffed, bloated national players who probably haven't innovated in decades. And no offense to those players, but I've dealt with many real estate agents and brokers before, and the biggest innovation oftentimes is like putting freaking LoopNet or whatever, because they don't want to pay for DocuSign license. So that's the extent of the innovation in that space. That space is in dire need of innovation. Just my opinion. The rule of 40 is essentially there. It's 39, but it's almost 40. Enterprise value over gross profit over revenue growth. How much am I paying for that growth? Only a 0.19. That is cheap. that is not the cheapest, but that is cheap considering the high quality of this company, in my view, in the growth numbers, because they are able to grow in a sector that has literally all of the headwinds of the world. Like literally, real estate is doing so bad right now, and this company is growing in this sector. So I have a hard time imagining how good they would do once real estate eventually turns around, because people have been waiting to buy their homes. People have been sitting on the sidelines, but at the end of the day, Americans love to move. The average American moves 7 times in their life, and they move for jobs, they move for family. Real estate transactions are going to pick up, in my view, as soon as the mortgage rates go down, and they will go down because of the Fed having to drop rates pretty soon. So long-term play, of course, but I find it very interesting. Okay, let's talk about the business. So are they trying to be the software broker, as I'm going to call it? So no brick and mortar, you're dealing with just an app, just a software broker. Are they trying to be the no-brainer software broker for agent? There's many reasons. Of course, if you look at their investor presentation, they make a big deal about AI and AI answering questions of clients, etc. Sure, why not? In the future, so maybe 10 years from now, they talk about vertical integration. That means selling solutions like of course the title, of course the mortgage broker. That's one aspect, but they want to do other things like payments, systems, debit card, credit card, everything for the real estate agent's business. That's fine. That's part of vertical integration. But the big selling point to me is the software and the advantages in the software. Briefly about the software. They spend a lot of time talking about how great their software is. I will just show you this slide. Feel free to do a screenshot of this slide. But it's true that the software seems to be very productivity-oriented, very streamlined, modern UX, modern UI. Again, a dire need in real estate. Allows you to do things like your brokerage operation, your back office. It allows you to promote. It has a community feature where you can promote your business with your own marketing. You can keep your own branding. You can make your own signs. That's the app. And, I think the app, as much as they love their app, I think it's a lesser selling point than this. To me, the biggest selling point is the money. And what is that? It's the 15%. So I'll show it to you right here. Before I get to the difference between traditional brokerage and a real brokerage, the compelling agent value proposition. So let's look at this so you can see. So this is what they're paying. So they have an 85-15% commission split versus the traditional system where it's 70% for the agent, 30% of a commission for the broker. So they are essentially 2 times cheaper than a brick and mortar broker. And make no mistake, in my view, that's why agents have been moving in droves to this company, because they're taking 15% while the regular brick and mortar broker is taking 30%. And of course, I'm sure you can negotiate with brick and mortar broker once in a while, but nonetheless, it's cheaper. It's much cheaper. And also, agents keep the commission after reaching $15,000 in the 15% commission split. So they are attracting the top agents doing that, because the top agents are like, well, wait a minute, I'm going to sell a bunch of homes. I'm going to 15% of my commissions is going to reach $12,000 really quickly. And then it's all for me minus the fees. And they charge hundreds of bucks here and there, because depending on the process and which step of the process. So that's the big deal. That's the big draw. I'll get to revenue sharing in a second, which is their MLM business. But of course, how do they differ from a traditional brokerage? Well, it's the high agent split, like I just said. So they make more money. It's the software. You just deal with the software. You don't need to deal with a physical office. And it is the ancillary services, the vertical integration. Now, let's talk about the revenue sharing model. This is how they grow. This is their marketing. They're using MLM, a multi-level marketing system, to grow. So they're counting on their current agents to refer future agents. And MLM get a bad rap, of course, with, was it Herbalife and Tupperware and all of that, or what is it, Avon? They get a bad rap, but I think in this case, it saves them a lot of money in this case. So what they do is they incentivize existing real estate agents to just recruit someone under them, and then they will earn 5% of whatever these agents sell. So actually the commission for Reax ends up being 10%, and the 5% goes to the referring agent. And of course, if you want to keep getting these commissions, right, as the agent who referred somebody, you have to stay with Reax. If you leave Reax and you go work for another broker, you lose your commission. So essentially, they lock their top brokers in because they want to keep getting the multi-level commissions. And you can see you have a standard tier 2, tier 3, tier 4. Where after that, you get commissions from people who were referred before, after you in tier 2 and tier 3, tier 4. And so, you get into a situation where someone who's really good at promoting Reax with their friends can end up earning a lot of money based on the commission of the people they recruited. And so you can easily imagine a traditional brokerage for real estate agents may be friends. Someone moves to Reax and then they tell them, hey, I'm moving to the real brokerage. Why don't you come with me? Let me refer you. And they refer them. And that creates a major incentive to recruit new agents. There is no denying that they've been doing a really good job at recruiting their agents. And let me just show you the economic model, how this works. How do they make money? Well, okay, so let's assume you're going to have an agent who charges a 2.5% commission. So that's already an agent that's competitive compared to the standard 3%. But let's assume an agent decides to charge 2.5% on a $400,000 house. That's $10,000 of revenue. And in that revenue for Reax, right, $8,500 is paid out to the realtor. So the gross profit is $1,500. That's the commission, the 15% commission. And then you have marketing expenses. So that's the revenue share. That's if that person was recruited, but not by Reax, but if that person was recruited by another realtor, they have to share a portion of that revenue. And here you can see the $900, up to 60% of the real estate commission is split, given to the person who referred you. That's actually the worst, absolute worst case scenario. It's actually lower than that for most people. So in the worst case scenario, when I look at this, you can see that the profit per transaction worst case is $600 on a $400,000 house sold. In most cases, it's going to be a little higher. And doing that allows them to retain realtors for the very long run, and it allows them to have a differentiated marketing strategy where they don't need to advertise, they don't need an enormous team to try to get new agents onboarded. They have MLM just working for them, and it's a very highly selling, highly compelling value proposition. And let's talk about how they've been doing. And they've been doing quite well. So first of all, just let me go back to this chart right here. That's the number of agents. So you see the agent counts 24,000 agents in Q4 of 2024. In Q4 of 2022, they had only 8,000 agents. So they've grown the number of agents multiple fold. So really, that's working out really well for them. What's even more impressive in my view is this chart. So they only have 2% of all of the agents, real estate agents in the US. So you have enormous growth possible ahead of them. And you can see, sure, public brokerages, they may have a fighting chance in front of real because they have the resources, they can have their software, they can lower their prices. But most brokerages are small mom and pop shop, and that's the bigger share of the business. Most real estate agents are employed by smaller private brokerages, so they're gonna eat into that, I think, really quickly. What I find more impressive is how good they've been doing at recruiting agents in the face of declining sales. These are the existing home sales going down. You can see it's been a catastrophe for realtors over the past 2 to 3 years. Yet they've grown their agents. They've grown market share in a very tough market, a market that has decreased more than a third in size compared to the normal world, like the normal state of this market. Now, why do they grow so fast? Of course, they grow so fast. And before I do this, let me just show you how quickly they are growing compared to their competition. So this is the chart where they show you how quickly they're growing to the competition. These are the publicly traded players. You can see, for example, Reax is losing 6% in terms of revenue growth. They're about 1% in terms of agent growth. And on the other hand, Real is growing 77%, plus 77% on agents, and plus 84% in revenue growth. So essentially, the rest of the market, is not growing nearly as fast as what the new player is growing right now. Some of it may be the law of large numbers kicking in. They're so small, so they have to grow fast. These players may be bigger, so it's harder for them to grow. I want to highlight that. But also, I think the agents are joining because the take rate, they only take 15% of your commission. Traditional brokers take higher than your commission. And if you look at the number of agents, why they join, why do the agents join Real? They join Real because of economics, i.e. because of a commission. 95% cite their reason for joining Real is the economics. Some of them join because of referrals, some of them join because of opportunity, but they cite economics as the big reason, and that's not surprising to me. Now, the growth, like I said, if you look at the productivity of this company, this is the number of agents that they have per employee, per brokerage, right? Per full-time brokerage employee, how many agents they have. So each of their employee has 136 agents. So think about your local broker. How many employees has your local small shop, small brokerage town, small brokerage company in a small town? How many employees do they have compared to agents, right? Is it 1-to-1? Is it one employee to 3 agents? Is it one employee to 2 agents? We're not even in the same league. We're 2 orders of magnitude higher, probably, right? It's pretty insane that each employee of Real is kind of accounting for 136 agents, and these agents are only growing. And as a result of that, as a result of these employees being ever more productive, operating expense as a percent of revenue is consistently going down. A big opportunity for them going forward, of course, is vertical integration, and that's I think going to be a big deal, because if they work with mortgages, trying to get people qualified for mortgages, etc., that's a 45 to 50% gross margin, and the title business itself is an 80% gross margin. So assuming they have 100% attach rate on their own services to the Reax app, a lot of money could be made on the back end, and that's a good thing, because again, the gross margin is just 10 to 15% on the front end. So these ancillary services are actually going to be very meaningful for a company like Real. And if you look at their opportunity to grow ancillary services, you may see that they definitely don't offer them in the whole USA. This is a very state-based business. They have a lot of the rest of the USA to conquer with these ancillary services, with at least the title company. That should be the easier part, in my view, but the mortgage company too. And so it's common for people to go and get a mortgage with their broker and actually not with their bank, etc. And then, you get your mortgage, and a few months later, you get a letter from a random fund or a random bank saying, hey, we bought your mortgage, now you pay off your mortgage with that company. That's how it works in the US, as you may know. So this is very compelling to me. The growth of this company is very compelling. The potential for growth left, considering they only have 2% of the US agent market share, is also tremendous. The fact that they've been growing in a struggling market is really, really good. And this is where I'll conclude this video, because let's make no mistake, a stock like this is a macro play. It's a macro story. It's a macro bet. It's a bet on, is the real estate market going to pick up? Because what's going to happen, given that revenue and sales are going up right now, they're going up right now with them acquiring new agents. Imagine what those sales are going to do once the real estate market actually picks up, once the buyers and sellers actually change hands with their homes, right? They change their homes hands. So if you look at agent optimism, optimism is going back up compared to the depth of the valley of despair of summer 2024. Summer 2024 seems to have been a really bad year, a really bad summer for real estate. And that's point number one. So agents are becoming more and more optimistic that the market may be turning around. And if you look, and this is, I think, a very meaningful chart, if you look at a survey of buyers who say, what are the challenges for prospective buyers? It's the mortgage rates. It's all about the mortgage rates, right? Some of them say lack of inventory. That's the blue right here. I didn't copy this to my print screen, but the dark here that you see is all about the mortgage rates. Mortgage rates is still 61% of the reason why people find it tough to find a home. And mortgage rates is the one thing that we know is going to change when mortgage rates drop. So this company could have explosive sales growth once the rates finally drop, as the change of homes from hands to hands oscillates faster, as there's a greater velocity of the change in home ownership. This is a business that makes money on the velocity at which homes change hands. So there's a lot of pent-up demand, in my view. A lot of people have been holding off getting a new job, holding off moving because they're waiting for the rates to go down. What's going to happen when the rates go down? They're finally going to take that opportunity to list the home and move elsewhere. That's what I think is going to happen. And while right now the sales growth is mostly due to them adding agents and being successful at recruiting agents with lower fees, I think we could have explosive growth in the future. On top of them attracting agents, we could have explosive growth because those transactions normalize, because they get back to normal. And if you look at the market, the way it was in early 2022, you had a 6,200 home sales SAR versus 4,000 today. So the market is a good third, reduced by a good third compared to what it was just 2.5 to 3 years ago. If we get back to the level of 3 years ago, that's a built-in appreciation in the number of transactions of a good third. And if there's pent-up demand, we could even go higher than that, because I do believe real estate is not dead forever. People want their homes. It's the American dream, and I believe it's a tough time, but it's not dead forever. It's not the first time, of course, real estate market goes through a tough time. It's highly cyclical. Every 10, 15 years it goes like this. But to me, I see a lot of positivity in this stock. I like this stock. I would love to see it slightly cheaper, but barely. That's already pretty darn cheap. I would love to see it slightly cheaper, though. And of course, on the Patreon, you will know if I ever make a move on this stock, because I share all of my movements. Right now requires more analysis, but it's looking good. And I think you could have a real takeover of traditional brokerages by this company. One last thing I'll say is do we need agents at all? And you may remember that was my open door thesis, was that we really don't need agents at all. And so this business is growing because it's still operating under the assumption that an agent is needed. And so maybe this is a transitionary business, maybe open door as the other side of the business. Where do we really need an agent? The disruption in real estate is going to happen. I don't know which way it's going to go. Maybe agents are going to remain a big thing in real estate, because you need a lot of personal selling. You need to have a relationship with an actual human, an actual person who knows the area. Maybe that's an aspect, or maybe that's another aspect where people are just going to go full on their phone, just deal with their phone, just scroll, click the buy now button, and talk to your mortgage broker to get your mortgage and buy the house and move in 2 weeks later, which was the value prop of Open Door. So interesting market. I think this could be an interesting play, and I like this stock. This stock appears to be the real deal in its own category, in its own space. It's up to you to decide whether it's a space you want to get exposure to or not. Anyways, this was not financial advice. This is not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.